following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good morning here. Had some technical issues at the very beginning. For once, it wasn't me. You know, have you guys been traveling lately overseas? The U.S. dollar is making that a little bit more appealing, the strength of the U.S. dollar. And on that note, I've been considering going down to Colombia again, down to Medellin, to see a very good friend of mine, Juan Villegas, who comes on this show periodically. And we do a lot of things with him down in South America, and we're going to do a lot more now. But I was looking at the Colombian peso. The last time I was down there, I think it was around $1,550, $1,600 per dollar. Do you know what? Take a wild guess what it is now. Just at all-time highs in the devaluation, all-time highs against the U.S. dollar. Over 3,300. If you've never been down there, I know it's got some bad history probably in the back of your mind from the 70s and the 80s. But, man, Colombia is one beautiful place. And Medellin, the city of eternal spring is what they call it. And if you go down there and check it out, you will be a believer in that statement. It is a beautiful, beautiful place. And that city's in a valley, and there's waterfalls coming all through the city, and it's just something to be seen. So the Colombian peso is devalued, and the place is beautiful, and it's relatively safe. I don't know if you kept up about the history of that place, but one of the more recent presidents basically annexed about a third of the country to the FARC rebels and said, stay over there. And once he did that, and basically told them also they're going to, if they kidnap somebody, they're going to come in with Black Hawk helicopters and kill everybody, including the family members. It kind of, all the nonsense stopped after that. So it's a pretty cool scene, to say the least. Yeah, Tucker. Yeah, if you spent a year down there, I don't know what decade that was in, but it's a very beautiful place. So is Ecuador. Nice spot over there too. And if you get a chance to go to Santiago down in Chile down there, man, do it. Very, very cool city. But that's a pretty good ways away from Colombia. So to get back on track here, let's take a look at the dollar. And we talked yesterday about a little bit of a collection area here, but the big buy point was going to be the bottom of this new profile if we got back down into that area, and that's 97.89. I think we're trading right now, as of the time of this show, we are at 98. So we're very close, and we've reached a low of 97.96. So we're in that range. I'm not opposed to taking a shot down here and at least attempting to get a move back up past 99 on this and up into 99.39. That's where our new box is. This is a day. We talked about this happening yesterday. Orange profile appearing above is actually kind of bearish, historically speaking. But again, those weeklies take precedence, and now we're at support area, and that's our targets up top, 99 and 99.40 up in that area. So that being said, we're going to go into something that we haven't mentioned in a while, but we've always talked about sitting on the bid on this one too, because there's just, in my opinion, no end in sight in the Canadian dollar getting devalued. And as we look at this, these are all, again, relative to the dollar. We talked about, trying to find support areas or breakouts. So we found the support area on 129 a couple of months ago. We get up into this area, compress into it, then start doing this classical technical analysis, not wanting to get away from this area and trading above the profiles. And then we get the spike this week. And obviously oil prices are not hurting this move up. If you think oil prices are going to turn around and go north a little bit, then this might be a short-lived bounce here in the devaluation of the Canadian dollar versus the U.S. dollar. But here's the 240 profiles. If you've got to find some support areas up here, they're at 135.06, and you've got a little bit of a lid up here at 135.96, 97. Let's just call it 136. So that's the short-term areas of significance on that particular product. And again, don't see a lot of reasons yet to get out of this. We start seeing some hints of we haven't seen any hints of a new profile attempting to appear on the daily. If you want to distract me, just send a message in. That always distracts me. All right. So as we look at a couple of the currencies here, the euro, this is something I was willing to take a shot around 109 yesterday. Again, this is the way the ball bounces sometimes in trading. Got to take some medicine. That's a little bit past my noise area. So now I'm going to have to wait with the stop. Great risk reward scenarios in place always for this thing to get back down below 109. I'm not extremely interested in going long the euro. Again, this daily, we kind of had to take that for what it's worth when we started breaking above profiles for the first time since October. But right now, I'm just going to sit patiently and wait. The euro is not in a high probability situation for me. There's a chance to start looking at this again around 110, but I'm really interested to see this thing get back down below 109, and then I'll feel much better that a lot of the players out there have decided that the euro don't need to go any higher. The euro doesn't need to go any higher is my English I should have used there. So take a look at the Japanese yen. This is something if you watch this show, I've been a big fan of going long here, and we're kind of back down into the support area. I don't like the way this thing's kind of gravitating around and consolidating around the support area on the weekly. But again, I'm a big fan of trading support on this product still. And the dollar, I think, with possibly bouncing off that 98 and some change that we just talked about earlier, might help this thing go north also. But again, the good news is you can place your stops, walk away from it, let it do what it's going to do. That's the way I trade Nadex sometimes. I can't. It's too much action. So that's what we're looking at on the euro. We're going to take a look at the Aussie. This is something we talked about yesterday. Similar situation, waiting patiently until we got down into some support areas, namely 71.69, 71.70. And we got down as low today. Let's see here. 71.72. So, and we're bouncing off of there. We bounced off 30, 40 ticks off of that. So that's where you're orienting the stops. Might be a walk away trade also for this thing to reach higher. And I think we can reach much higher. We can reach 73.63 on the Aussie dollar. So you got about a possibility of a close to 200 pip move there, which will be a really cool thing for your position account. And as we finish up with the Aussie dollar, we're going to hit some other usual suspects here. The ruble, we kind of hit this, and I was just able to talk to the Russian stock exchange, Russian foreign exchange guys. JP Morgan Bank was at that EMFX conference in London I went to. And even when we had these spikes on the ruble back, remember when we hit 80 on the intraday way back when? Was it 80? Yeah. Their systems handled this relatively well. We were talking about the back end, all the fixed connectivity. Fix is a protocol for banks and financial institutions to communicate electronically. If you get any API, application programmer interfaces from a programming standpoint into any of these hubs, there's a lot of proprietary API links that don't involve Fix, because Fix is a whole different ballgame. But all these banks and all these exchanges communicate with each other via Fix connections, as they call it. If you want to look it up on Google, actually, it might be interesting. But so their systems held up relatively well when we had all this volatility, and the ruble was getting killed. But now look at what's going on here. These are our weekly profiles, and we talked about leveraging off of this around 53, if you remember. And then we found support again down here, top of the profile. We haven't had any new profiles appear, and this thing to me looks like it's going to head higher, and oil get cratering again is not hurting this concept. So we talked about the Canadian dollar. We talked about the ruble a little bit relative to the U.S. dollar. Now we're going to hit crude oil, okay, the culprit. So just to give you an idea, here's our weekly view on this. And we talked about the only way we could really get long with any conviction was getting back above 43. Now we might actually have a chance, and that never happened. So that's been very cool to avoid that issue. But we may have a new profile appear down here, a new set of inflection points to lean on to try some of that contra trending type trade against the long-term trend down. We do have a magenta bar appearing on our weekly. It's a little bit of an exhaustion move possibility, but I'd like to see that new profile. Here's our daily. Nothing new here. No new profiles attempting to appear. So do I think that this thing is going to stop right now? I don't. There's no indications of that right now. You're going to have to monitor the scanner intraday, and we're going to go to this scanner really quick. We're going to go to our futures section, and we're going to look at crude oil again as we did the other day, and it's, we're sitting at a little bit of a 240 support area, as it says bottom there. But again, not a lot of green shoots here. And I'm going to go back to our Forex section and just let you guys see the products that we looked at. Like, I don't know if you hear these chickens in the background, man. The little ladies are not happy this morning. It's amazing the temperament of a hen. It's these hens are spoiled though. So there's the Aussie dollar. There's that big support area that we talked about yesterday, sitting right here. And on the Russian ruble, where are we at here? There we go. There's those greens, and man, been enforced 28 straight weeks. Okay, so the long-term guys, 28 straight weeks has been buy support, buy support, buy support, buy breakouts. So that's the situation. Okay, that's the situation on the crude oil, and we really don't have a lot of indications to start nibbling on this yet. Even this 240, the way it's rattling around, looks like a consolidation to move lower. So when we come back, we're going to hit January beans. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Before we get into Jan Beans, just want to show our S&P breadth chart situation here on multiple time frames. In the upgrade that should be coming out today, worst case tomorrow, the breadth charts are now going to update every 60 seconds. So we're going to unhinge them from the platform underneath so you can actually keep that up without having to. They're going to be disconnected, which is going to be cool for people who have multiple pieces of real estate up like me, and be able to kind of monitor that. And it's going to change every 60 seconds instead of the scanner updates on all the underlying instruments every 60 seconds, but this is now going to update every 60 seconds. So that's cool. Yes, Jay. Okay, so let's take a look at, let's get back to our futures section and let's just look at soybeans here, January, just to let you see the middle ground landscape that's showing here. And this is where we're at. And this POC on the weekly, when we have a wide profile, we always talk about the POCs are a lot more relevant. So let's go down into Jan Beans right there. And I had kind of, last week before I went to London, I said, we're going to have to really to back the truck up, put stops in, of course. Situation is going to be around 907, 908. That held true, but, put a gun to my head right now. On a short term, I'm probably going to be looking at this from a long side to possibly, and I'm going to show you why. The long term, I'm not so really excited about just backing up and getting long and just waiting a month. That's not what I'm seeing here. We're bouncing off that POC and the former daily for high that we broke out from before. That's a great little area. That 880, 878? Is that what that was? No. Where's it at? 872. That's Actually, we hit that to the tick yesterday, which was kind of cool. But right now, we got a profile that's a little bit higher on our daily. Again, put a gun to my head. I think we could actually just kind of gradually drift up a little bit here, but we're pretty non-directional, John. And that's the way I'm looking at it right now. I just, me personally, I'm not looking at this as a chance to really trade beans with a big amount of edge, so to speak. I think the big move was made, and that's what we kind of waited on and banked on, and that trade's probably over for a little bit right now. So no problem. Glad to do it. Yeah, throw those questions out there. Just like, Terry, we've got some custom situations here in the scanner. He's asking about a custom sort, downtrend resistance. So these are stocks that have been exhibiting, and I tightened this algorithm up a lot. These are stocks, and let me pull up actually the little algo for this. Let me see here. Here we go. I'm hearing things again. Okay, so these are actually going into a help tab right next to the name of the custom sort, which you can access, and it's going to put this right in your face in this build that's coming out later today or tomorrow, worst case scenario. So I'm going to go down to, something simple, really, just to first of all peg this. Breakouts. It's hard to satisfy everybody with custom sorts because, okay, what's the custom sort? Does the custom sort focus on long term or intermediate term or short term? We kind of focus these custom sorts on long and intermediate. The short term day trading side of the fence, we'll get into that, and we'll make some more custom sorts for stuff like that. But that's kind of profile oriented more than anything else. You can pretty much deduce that, I think, from what's on the grid in front of you. But downtrend, where are we at? I'm going to have this soon enough here. Uptrend support, downtrend resistance. Here we go. Got about 30 seconds for the next break, but we're going to continue on this path. With downtrend resistance, we first want to find the instruments that are exhibiting some form of long-term downtrend pattern, then catch them on the resistance inflection points of that time frame, even leaving the door open for resistance being met on lower-term time frames. Okay, so that means weekly and daily focused. All right, so we got about 10 seconds. So I'm gonna wait. Was it Terry? I'm going to wait a little bit here before we get into this because I think this is going to be very interesting for everybody to hear. I hear the music, guys. We're going to hit another break. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were looking at, I think we're going to have Juan from Colombia on in just a minute. They're going to grab him. We're going to talk about Colombia and talk a little bit about this Colombian peso and some other things going on in that area as far as the instruments being traded down there. But we're looking at downtrend resistance. So we covered the first part there. We're looking for stocks that are exhibiting some kind of downtrend and then possibly at some inflection points for leverage. So basically, to sum it up, I didn't want to see any kind of blips on the radar screen that were just breaking down. Those will literally be in the breakdown custom sort. I'm going to go back here and I'm going to go to breakdown. So that these are going to kind of be either weekly or daily number one on the weekly or the daily. So they're just going to put them. And you can sort these. You can don't have to have these custom sorts, this particular custom sort to flag this, but it's basically putting the ones on your radar screen quickly that are going to be breaking down below profiles on a weekly or daily. But that being said, if I go down to downtrend resistance, these are going to have to qualify by being greater than 1, by being past the breakout mode and actually verifiably, in my opinion, being in some form of a start of a trend down or maybe already in an existing trend down. So going back to the explanation, so we're in the second week minimum of a move down below weekly profiles in this case, and we've got a whole nother set of conditions if we're trending down and still in a weekly balanced area, but the arrow is pointing down. So that arrow kind of, even though we're within a balanced area or within the middle of a profile and not being above or below, is going to signify whether the trend is down or up on a long term. So if that's the case, as we talked about, below profiles on a weekly more than 2 weeks or greater, basically, prices moving back up into the weekly unfair low inflection point bottom, while at the same time price action on this weekly time frame is not consolidated around these weekly unfair lows. So the reason that qualifier is there is because we don't want something that's really been congregating around these weekly unfair lows. We want it to at least have developed. And, that classical, I talk about compressing up into the inflection points a lot. Those are, kind of what you don't want to see. So we want to have something that's either just coming up into those inflection points or at least not congregating around it. So price action has been below daily profiles for at least 2 days and is moving back up into the unfair lows. Price action is moving up into the daily unfair highs from within a daily balanced area, while at the same time price action on this daily time frame is not consolidated around these daily unfair highs. So the qualifier for the upper part is a weekly. We're going to go through some examples here. But before we do that, while I think we've got Juan on the phone with us, we want to talk Turkey a little bit about what Juan's got to talk about from Colombia here. Juan, are you there?
Yes, I'm here.
Hey, buddy, how are you?
Great. How are you doing?
Good. The first question I have for you is, I didn't realize how decimated the Colombian peso is getting relative to.
You're kidding me, man.
I didn't realize it till you threw the dart on the board the other day, and I wanted to get your thoughts and everybody's listening on where this thing's headed and what's driving it.
Do you have that chart there? Oh no, you don't have Bloomberg there. You don't have the chart.
I should be able to pull it up. What's the pair? Symbols?
USD COP Charlie Oscar Papa USD COP.
Let me see if we can grab it here. No, it might be the other way around here. COP USD. I don't have it. I'll tell you what. Let me grab it off of a website here. Hold tight, but just go ahead and feel free to start rambling about that because.
Well, yeah, the thing is quite simple. Colombia became an oil exporter and have a lot of investment in the oil industry in the past 10, 12 years. Invested heavily in that industry, and once the price come down, the possibilities for that industry to be successful decimate. So that's basically it. It's the same problem that Brazilians are having in Petrobras and all the oil industry there. Same problem with Canada, same problem in Australia. But now the difficult situation here in Colombia is that we had a corrupt and irresponsible government who had 8 years of high oil prices and then start doing we also have some corruption scandals here.
Okay.
Very, very serious scandals. So it's the same story in Latin America, in Brazil, Venezuela. You saw what's going on there. It's a rich country, is full of oil, and they took advantage of having all those reserves in the past 10 years. They blew up 500 billion in Venezuela in 12 years, $500 billion.
We're approaching blowing up 20 trillion. So, it's it's all over the map
so
here.
Guys in America, yeah, it's
when those chickens come to roost, that's gonna get super ugly, and I don't know why that's not something talked about constantly, but I think everybody wants to ignore that. It's just the gorilla you don't want to talk about in the corner of the room, the U.S. debt situation. But I was telling them,
that debt situation. This is funny. Let me tell you about what I think. Just a couple of thoughts about that. Last weekend, I was just reading this amazing article about from Nicola from the guy from Tesla, from what's his name, the CEO. Anyway,
the Russian guy or whatever he is. Yeah.
Anyway, somebody might know.
I forgot his name. I forgot his name too. Tesla.
Jesus. But anyway, he was just showing.
Elon Musk. Somebody just typed it in the
Elon
den.
Musk. Exactly, Elon Musk. So he was talking about CO2 emissions and the chart of CO2 emissions. And if you compare that chart of CO2 emissions with, the U.S. Stock market, and it's interesting to see how in this era of industrialization, of fast growing and of quarter after quarter, looking if a company is growing or not, is correlated with CO2 emissions. So in a sense, if we continue in this route, it's not that the market is going to crumble, it's that the whole planet is going to crumble.
Yeah, that's probably not a great timing tool, as you know, but I hear that relationship loud and clear. I mean, that's a multi-year timing tool.
And then, okay. Now with Colombia, now the problem is I guess is. If you check around the world, is the number 1 or 2 currency that has had the biggest impact against US dollar in the past year.
Wow.
So that's why it's cheap to calm down and have fun in Colombia, man. I'm waiting for you here.
Well, I'm coming. I mean, as you know, we got a lot to cover, and it's about time. We've been waiting for a while to get together again. And I'm looking forward to going into the Bloomberg office. I hope we can traverse over to Brazil while we're there.
Yeah, you should go Bogota and Sao Paulo.
Yeah. Well, I'm looking forward. How long's the flight from Bogota to Sao Paulo?
5-hour flight.
Really?
Yeah.
My God. Okay.
Yeah, Sao Paulo's down there. It's pretty. I mean, if you go to Buenos Aires, it's going to be a 7-8 hour flight. That's another place. Or Chile, Santiago. Santiago is another place that we should visit.
Well, since the peso and the real are getting killed, I'll be buying the tickets. How about that?
Perfect.
Against the dollar, yeah. You're in Medellin. A lot of people don't realize how beautiful it actually is there. And I've been noticing,
AOS Alert Manager.
I've been noticing, and I've been following the real estate situation down there. You okay?
Yeah, I was just having this Siri thing on the Mac.
Okay. That's cool. I've been noticing real estate prices there, man. It's just been kind of going north for a while.
Some people say it's another bubble in kind of. Yeah, I see a lot of construction, and we have. We measure here in square meters, but we have not feet. But for instance, let's say 2,000. Let me ask you a question. How much is a square meter, if you can convert in New York City or in your hometown, the best neighborhood right now?
Like per square meter, what the build-out price is, or?
Yeah. Is it going up? Is it going down in North Carolina? Or what is the highest price? The highest.
I sold my house in Raleigh a couple of years ago, and I feel like a complete idiot because that is North Carolina's population. This is a different scene here, but it has doubled in the last 15 years. So therefore, a lot of people going to get out of the Northeast. It's a high tech area. Believe it or not, it's a good place to live, and therefore housing prices have gone up. But I mean, they've gone up significantly in the Atlantas of the world, the Austins of the world, especially. It's just crazy. Yeah, just ramping up huge.
Yeah, same thing here. I mean, in Cartagena, it's just mind blowing, man. It's but there's still a lot of people coming and buying, and you see new projects and they sell those projects. So Colombia is been in vogue for the past years because of the climate. Medellin has a very, very nice climate. It's like springtime the whole year, so people value that. And we have a lot of people buying property coming from
Is it a kind of an open marketplace? I mean, because where I go in the Philippines, stay a lot. You can't really buy real estate there. You can in some kind of dummy corp and it's kind of scary. But you can buy condos, but you can't really. I mean, how's Colombia on actually physically own it?
It's
really?
Wow.
Open.
I mean, you can buy property very easily here.
Wow. Well, I'm looking forward to getting there. Hey, What do you think about gold here? Are we headed lower?
Gold.
Yeah, I mean, you were the one calling, and you were pretty much spot on. This thing was going to hit 1,000 and maybe even lower. Do you still feel that way?
Yes.
Okay.
Yes. Not today, of course.
Right.
Maybe we got to bounce up to 1120 at the most.
Okay.
But we are 1082 right now at gold. So, but no, what I see coming down is S&Ps. I'm shorting S&Ps. I'm shorting Dow. I'm going long euro here, and maybe British pound also, and the treasuries, the 5-year and the 10-year. Maybe we're gonna have a bounce today in those also.
Right. You know, one of the things I was listening to Larry's show yesterday and maybe the day before, right after this show, and he had some of the similar numbers, 1089, 1090. We got to get above there to really start feeling hunky-dory about getting long gold again.
It's
and
a
I know
huge resistance. The 1090 is a huge resistance. I have the point. Well, with my setups, this is the 1090 is POC of weekly, daily. Is a very.
It's a big area.
It's a big area, but the trend is stopped so far. Intraday, for instance, it looks like it wants to go higher.
Yeah, I've got the weekly chart up right now, and that 1120 you said earlier. I've got 1119, 1120.
Yeah,
that's
1920.
New profile. That's going to be the targets, and in my opinion, I think probably yours. If we could get clear 90, especially get a daily close above there, you could kind of orient some stops below there, and then that's kind of what you're looking for on the upside. And I hear you. Yeah, but that may be the next time you just got to back the truck up and sell, though. I mean, I don't know if you know. I mean, it's.
I know, John, that you don't use the maps a lot, but when you put a map on the daily on gold, you see that we have a huge valley in between 1070 and 1170. If you put the map, why is that a good tool for me? I know you don't use it a lot, but it's because it gives you a visual cue or where the market will be vertical. Because as we know, the markets go horizontal in the high volume area of the map,
right,
and they go vertical in the low volume area of the map. So yeah, 1090 is when the market trades in gold above 1090, that's the place where you enter the low volume area of the map.
Yeah, a lot of people out there are probably asking, well, why didn't you tell us about going long around 1040, 1050? But, folks, Juan will tell you this too. It's like, you can be a cowboy. You can try to buy these. You can try to be the guy who catches the low print, but a lot of times it's just better off to wait for these confirmations like he's speaking of to clean and clear where people will actually start having to actually cover, which is what we're hoping is going to happen above this 1090 area, right, Juan, into 1120. Hey, listen, can you hang out for another break here? Just one more?
Absolutely.
Great, man. Thank you. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Thanks for coming back. Juan, are you still with us?
I'm still here.
Great. Well, we've talked about gold. I've been pretty bearish on the euro forever. Do you think this little blip on the radar screen on the euro is just a blip, or are we having some kind of sea change event going on this thing right now?
Well, so far as we've been getting buyers at this level. Goldman Sachs was predicting 103, and now we have daily and weekly. Yeah, we have, I think 110.80, 111 at the most is how this high can go in the coming days or weeks. But not sure the fundamentals are. It's pretty oversold on the monthly, though, don't you think?
Yeah. I mean, I'm kind of with you. I mean, I was a big fan of leveraging off 109, and that's what stops are for. Them's the breaks, whatever. But now that that's been breached, not significantly, but this is my opinion. Just I think there's higher prices. You could maybe get off some more shorts. You could try something around 110, but then the next stop after that could be like even 113 and even higher. Yeah, this is a pretty good rip up here. But, yes. Again, we talk so much, you and I do too, especially. We talk a lot about this on the show. It's hard to sit in front of these screens sometimes and do nothing. But, this is, you got to wait for the edge to probabilities to get in your favor, and you got to wait for these battle areas to be hit by the price. And I just don't see the leverage here unless we get back below 109 or rally higher. So this is kind of no man's land to some degree for me right now.
Pretty much.
Yeah, I got another question for you.
Yes, sir.
I went to this emerging markets Forex conference up in London last week. What was really amazing to me, Juan, and I want to get your comments on this. Some of these off-the-wall pairs, like the Nigerian whatever crossed with the, Indian rupee or something like that, there's market makers coming into these things now, and there's platforms really exclusively offering these spreads that usually were just so completely illiquid and really wide. Do you think that's getting ready to be the Wild Wild West for day traders? Is that little? Have you even been following that scene? It totally blew my mind what's available now. Hello? We might have lost Juan. Let's see here. Okay, we lost him. All right, so I will. Okay, no problem. All right. We'll try to ask him that question next time. Right now, we got about a minute left, guys. So what I wanted to do is we had a question on what was it? Unleaded gas. I don't think we've got a chance to go into that hardcore. We haven't talked about the S&P, so I wanted to just brush on that because everybody's watching them. Big area 2045, looking very, very heavy now, and the breadth is very coinciding with these moves down. So I'm going to go into my dashboard here. I'm going to look at the S&P situation. Weekly hasn't crossed over. I think 2045 is still something to look at as support based on that alone. But you've had some really good crossovers lately that have stayed negative. And as we had chatted about this past week, you've got to keep your eye on these numbers here, and you've got to be aware of the longer-term inflection point. So as I look at this, here's that 2045 on the weekly. That's a big number we're revisiting. And here's the 240s that, Jay had talked about this 2067 the other day, and now we're just sitting there waiting for another breakdown below 2051. 2045 is that big number, guys. We got to stay above there, and that's going to be something to see how the breadth back around that number. Whew. Larry's next. I'll be back tomorrow. Good day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.